in just about 30 or 40 seconds. Or actually a couple of minutes, it's going to walk through and it will apply the strategy, the stock trader strategy on every single stock in the NASDAQ 100. Yeah, Dennis, I'd be glad to do the walkthrough on the strategy analyzer. Actually, what I'm going to do after the webinar, just so that we can get through everything here today, is I'm going to make a series of small YouTube videos that will show us everything that we're doing and post them to YouTube. So send me an email here in about the first part of next week, and be glad to send you a link. I just created the YouTube account yesterday, so you can search YouTube for AutoTradeSignal. I'll put it for you there. AutoTradeSignal on YouTube. Doesn't have anything in there now because I haven't uploaded any of the videos, but I'll be uploading the important points from each of this there so that you'll have it to refer back to. But you can see here, we've in the time that it's taken to explain it, we've gone through the NASDAQ 100, and LINTA would have gained about 29% on one trade so far this year. AKAM about 26% so far in this year. So you put together a number of trades like that throughout the year, and you can do pretty well. Which ones? And so I would put LINTA, ACRM or ACAM, eBay, Joy, all these things. I believe that's Lamar Communications. Those all would be on my watch list. Now, I would have cut it off about here, SBUX. We had some others that were smaller trades, but what I would do is I would go through, take your biggest winners this part of the year. I would also go through and take a look at what did well last year. And to do that, you just go through and you back test it, and you change the dates for all of this. And let's go through and let's put the test dates, January 1 to December 31st of last year. And it'll go through and pull together all of that information. And what you will find is you will find that certain stocks consistently show up. Some will be there as good performers last year. Some will also be there as good performers this year. I would begin to build for yourself a basket of stocks. For example, that LAMR, looky there. It was our number one stock from last year. I didn't actually trade this one, but if I had, we'd have traded 6 times. 4 of the 6 would have been successful, and we would have had a 223% return on our investment. Not a bad deal. And since I have several here that earned at least 100% return on my investment, I would just take the best ones. Probably the ones that I'm going to start watching is the Wynn Corporation here. If you've ever been to Vegas and you've seen the Wynn Hotel, obviously it did very well last year. Probably one that's not on this list but also did very well is LVS. LVS is the Las Vegas Sands Corporation, and they also own the Las Vegas Sands Convention Center in Las Vegas. Did about 380% return for us last year. And so what I do is I back test the information to find out historically what stocks have done well and what stocks have not done well with the system. Now here's the important point to remember. Let me go back over here. Here's the important point to remember. You want to develop a basket of stocks that do well in performing or getting along with the system. Even though a stock may have done well last year, for example, the Fidelity mutual fund that invests in gold did very well. That's because gold did well last year. Now, it doesn't mean that I can trade that mutual fund equally as well and have good trades. Actually, the gold-based mutual fund would have been a terrible one last year to invest in because it is highly cyclical. And so I would have just stayed away from it. Now, if we go back and take a look at the stock performance here, even though this LAMR earned 223% with our system, does not mean LAMR earned 223% last year if you had bought it January 1st and sold it December 31st. It may have only gained 40%. Well, how did we get 220 something percent out of a stock that only earned or went up, let's say 30 or 40%? Well, it's because we only were holding the stock in periods where the price was going up. And because of that, we got all of the price movement in a positive directions and didn't have to weather the risk and the result of the stock going in a negative direction. And so because the stock trader got us in at the beginning of the price move and out before it went down very far, we could only be invested in that stock during periods when the price is improving. And that's really what we want. We want to maximize our return on our investment while minimizing our risk exposure to the downside when the price is making a small correction. Sometimes that means you get into it and you have to take a small loss. If I was looking at this information here, I would probably watch LAMR, but I might not watch STX or LINTA. Because if you look at it, LINTA, we had a total of 7 trades. We were only 30% successful, so only 1 or 2. Now, we also had to weather a maximum drawdown of 14% while we were waiting on apparently that 1 or 2 big winners for LINTA. That gave us this good return. Since we had such a low winning rate and a relatively high drawdown, I'm not going to do it. I'm not going to trade that one. Why? Even though it got 142% return, I could have traded VMed, also got 142% return, but only had to suffer through the waiting of a 4% drawdown, and I had 3 trades and 75% success. From a psychological standpoint, the 75% success and a 4% drawdown is much easier to weather for me as a trader than a 28% winning rate and a higher drawdown. And so that is what I use to put together a basket of stocks, and then I simply go in at the end of every day and take a look and see which one is doing well. Let me put it back here on our chart, and you can see if you click the default trader here, you can see some of the ones that I watch on a daily basis. I watch Apple and Adobe, AIG, Caterpillar, and then here's my fidelity list that I have. Google is another one. Google is another great one. Here we bought it at 436. And let me go over here and move our screen. Sold it at 576. So we made over $100 a share on Google. And Google has just been a phenomenal performer for us, and one that I'll probably still continue to follow. It got back into it at 546. Got out after about $20. But probably what I'll do is I'll wait maybe another day and see if, since this was only a small downtick, we had this big jump down here, which no doubt is what generated this sell signal here. So I might wait another day just to make sure that that sell is confirmed and enter that trade manually with my broker, because then I can go in at night after I get home from work and not have to worry about trying to trade during the day or stay up half the night waiting on the markets to open and things like that. Let's go ahead and continue on. There are a few more things that I wanted to go through.